Yesterday's comments from Jerome Powell ruled out the possibility of an interest rate cut in March. The situation in the stock market was exacerbated by weakness in the technology and the banking sectors, with the major indexes posting the largest daily losses in many months. On Thursday, futures halted their slide and turned positive. InstaForex analysts are ready to tell you about the main events and risks. You are watching a fresh review of the US market with me, Ekaterina Stikhina. The S&P 500 index closed with its steepest daily loss since September 21. The benchmark lost 79 points, or 1.61%, to settle at 4,845. Thursday's pre-market trading was mixed, but another batch of macroeconomic statistics helped the index recover. US stock index futures rose by 0.01 and 0.6%. Looking ahead, the S&P 500 index is likely to move in the range of 4,840 and 4,888. A breakout of one of another boundary may lead either to a decline to 4,800 or a rally to 4,916. US stock indexes fell on the last trading day of January after the Federal Reserve dashed investors' hopes for a March rate cut. The Federal Open Markets Committee's decision to hold rates steady at 5.25 and 5.50% came as no surprise, but it emphasized that the regulator would not start easing monetary policy until it was more confident that inflation was truly beaten. At a press conference, Fed Chairman Jerome Powell stated that an interest rate cut as early as March seemed unlikely. At the same time, he acknowledged that all committee members were ready to start easing this year. Powell's statement disappointed the already frustrated investors. Wall Street witnessed a sharp slide, with Alphabet falling by 7.5% and Microsoft shedding 2.7%. What's more, New York Community Bank Corporation shares fell as much as 37.7% to their lowest level in more than 20 years, causing the regional banking index to dip by 6%. And this has had a knock-on effect on the other banking stocks, leading to a sharp 1.6% decline in the S&P 500 index. All 11 major US stock indexes closed lower, with the telecom services index and technology stocks suffering the largest percentage losses. US stock index futures rose on Thursday, recouping some losses from the previous session's sell-off on Wall Street, as traders awaited key corporate reports and the banking sector managed to rebound slightly. Labor market statistics also contributed to recovery in equities. Fresh data on the US jobless claims rounded out this week's reports. Initial claims for state unemployment benefits in the United States increased for the second week in a row, and the indicator advanced to 224,000 from 215,000, beating the forecast of 212,000. Some economic indicators released on Wednesday, including fourth quarter employment costs and the ADP employment index, point to some easing in the labor market, which the Fed sees as a necessary precondition for bringing inflation down to its 2% annual target, which is good for the stock market. So there is a cause for optimism given Powell's focus on employment in his speech. One of the more dovish aspects of Powell's remarks was the asymmetry on the employment. Strong employment gains won't necessarily forestall rate cuts, but weak employment gains would absolutely hasten rate cuts, analysts at JP Morgan noted. Still, the sense of caution prevails in the market as the key employment indicators are set to be released tomorrow. But today's mood among traders could still be swayed by the PMI in the manufacturing sector. Additionally, the focus is shifting back to the earnings of major technology companies. Apple, Meta, and Amazon.com are in the spotlight today, but the tech giants will report their profits after the market closes. In the currency market, the US dollar index pared its intraday gains following the release of the unemployment claims data. At the opening of the US trade, the index was trading at 103.50, up by 0.29%. Analysts predict fluctuations within the range of 103.20 and 103.80 for today's trading session. The dollar saw a modest rise on Thursday after Federal Reserve Chairman Jerome Powell dismissed the possibility of an early rate cut in the United States, while the British pound trimmed its losses following the Bank of England statement that more evidence of slowing inflation is needed before easing. Meanwhile, the euro fell to a 7-week low. As a result, the dollar index climbed to 103.63, but the jobless claims data slowed its growth. The USDX remains close to its recent high of 103.82, but no new highs are expected until Friday's data. The Canadian dollar significantly suffered from Powell's hawkish remarks on Wednesday, and today the loonie has stabilized. Before the opening bell, the USD-CAD pair traded at 1.3447, up by 0.09%. The forecasted trading range for the loonie is seen between 1.3410 and 1.3471. The Canadian dollar weakened against its US counterpart on Wednesday, retreating from a nearly 3-week high. For your record, that data yesterday showed Canada's GDP likely grew by 0.3% in December, marking a 1.2% annual growth in the fourth quarter. Following these figures, the loonie reached its highest intraday level since January 12 at 1.3359, but all optimism from domestic prospects was nullified by the Fed signals. Additionally, oil prices significantly declined on Wednesday, and today the situation on both currency and commodity markets has stabilized, but the loonie, like other currencies, may spend the day waiting, as Friday's US employment data is another test for the market. In the meantime, the crypto market continues to test support and resistance levels. During the day, base assets traded predominantly in the red zone, with Bitcoin struggling to stay above $42,000, trading lower by 0.8%. The crypto market succumbed to the contagious atmosphere of caution's risk sentiment, despite traders receiving several positive signals. Notably, Robert Kiyosaki advocated for using BTC as a hedge, El Salvador maintained its commitment to Bitcoin, and Tether reported a record net profit. Regarding trading prospects, the key level for Bitcoin is $42,000. If traders can hold above this mark, the asset will return to levels of $42,900 and $43,400, and the alternative scenario suggests a decline to $41,700 and the next target of $40,100. And this was the InstaForex review for the trading day. We hope you found this information helpful. Don't forget to subscribe to our channel for daily updates, and remember, the world of finance is full of opportunities. Wishing you successful trades and see you online tomorrow.